I think I joked with Keith multiple times. I was like, it's like most people when they're going through this aren't servicing a large book of business at the same time. And I kind of wanted to give myself, um, excuses at times, but when it took time till we kind of buckled down and got into it and kind of changed the focus a little bit on really looking at two main areas. And I'm sure you guys have heard it before and have probably already started to focus on it, but a lot of times when I was doing quotes with people, I would, try to really go into it and, look at the 20 to 30-year terms, the advanced options and really try to find, the best fit when, sometimes it's just not, it's just not time to go that in depth with everybody. A lot of times it's good to get something in place, you know, get that first hurdle and then, set up the annual, meeting specifically around life insurance. So a lot of the sales I did end up having were, focusing more on the 10-year term just to get people in the door, get people into the situation where, hey, we are protecting your future insurability option. And that's really the way we had to look at it, to make sure that people would look at it from the perspective of, hey, I don't, because obviously everybody hears the same thing right off the bat. I don't want to get life insurance. I don't have the money to do life insurance, or I've got life insurance through work. Those are kind of the three main things that you hear. And, you know, getting getting past getting past all that information, um, really helps when you can just say, well, I'm trying to do what's best for you by, looking at your future. And right now, I can't see into my crystal ball and say, hey, you're going to be, the same height, weight, health, et cetera, that you are, 10 years from now. But I can guarantee you that you're going to have more money from 10 years from now. So, get into something to lock in your health. And we can always approach this later and push through other options that are, maybe a better fit for you in the long run. So that 10-year term really did, we did get quite a few policies that were just as simple as running that. And the other focus that we had is, we reached out to as many people as we knew, existing clientele wise, and in our friend groups and stuff like that, and really started to approach, looking at saying, hey, obviously kids, a lot of people have a basic kids policy, in place, but 9 times out of 10, it's something that's, non. I got two Jesses in the window here. That's nice. um, that's non-contributing. Something that doesn't, it's not really designed to do anything but besides just kind of give some burial coverage. And we talk through things. Hey, do you want to put money aside for college eventually? Do you want to put money aside for to kind of get them going for retirement, even if it's a couple bucks? Obviously some people can't afford to do a lot. Do you want to have an option where you know the kids are going to be able to own something of their own down the road? And so whether it's looking at, obviously we've done a lot of concepts in the past. I know Keith has done a lot of um, calls and stuff regarding like the max concept IULs, but sometimes people don't always are able to afford that and get into that mix. So looking at doing 20%, 25% above the target to get them in the door once again, and having the flexibility because every year, every time you want to go into that policy down the road, you can look at pushing more money into it down the road. So having something to say, hey, well, yeah, my goal is to eventually charge, or not charge, but to put, $20 a month aside for college, or $25 a month aside for, the kids' retirement. Let's just do it all in one policy. And, giving that option to show that, that scenario is obviously what the IOL is designed for. So I don't know what you guys, have for natural markets and local network connections and stuff like that. If you're working with, your realtors and stuff like that, if you have anybody that's connecting, and referring business to you, everybody that's buying a new home, you should be by default, including the mortgage, protection concepts in there. And it doesn't have to be, you know, like I said, it doesn't have to be a 30-year concept. You can do it as a 10-year window, and then make that reconsideration down the road when it comes to a review down the into the future. I think that's what a lot of times people kind of get into a lot. Is I've had a lot of agents in the past that they're like, well, the mortgage is 30 years and they've got $200,000 left on it, so I'm going to do a $200,000 30-year term. Well, I mean, that's great, and that might be a good fit, for them. But what if they're already tapped out, income wise, but yet, they don't have any life insurance. So you're trying to do what's best for them as well as kind of keep an eye on their budget. That 10-year plan is like, 15, $20. So I mean, it's not a big deal. It's not a big cost. Um, we had also done some, and this is something that I haven't done in a long time, but during that window when we were doing, Blue Vase, and even on and off again since then, we have done some focus on, a few internet leads that, I took off all the filters. And a lot of times you get internet leads and like, oh yeah, I want accident free, I want this and that, I want, basically this perfect customer that, 100% of every other carrier is looking for. Well, sometimes, it's better to, maybe play the Bristol West, approach and say, hey, I want to looking for the people that maybe they have some activity, maybe they have some stuff on their record, and take advantage of that huge 10% discount on the Bristol West, policy, and say, I'm just going to package it. This person has, you know, a $3,000 quote, and 10% off, and I can get them a life policy for $200. All of a sudden, you're saving them $100 for having the auto policy and the life, regardless of how you approach it. The way I did it was, hey, you've got Progressive right now. Your Progressive policy is $225 a month. I'm going to get you, you know, a new plan. It's $230, but it includes life insurance and this. Plus, we improved. I always generally, pushed up the liability a notch, or something else, just to kind of give that value difference. And I had quite a few people that bid on that, right off the bat. Um, and that's still something that we actually just had one that sold, roughly 3-4 weeks ago with that same concept, using the Bristol West Auto, and the using that multi policy discount to do the life policy. I had a lady about 2 months ago who has gone through cancer, and she's in remission now, and we were able to do a Bristol West policy, renters, and a basic $5,000 graded death benefit policy for the same price that she was paying, for Progressive. And she's like, I can get, you know, life insurance, still, even with my, the cancer that I had 5 years ago. I was like, yeah, yeah, you pass the 5 questions. There's nothing that's going to be an issue from that perspective. And she was just absolutely surprised. I mean, gobstocked is probably more accurate. I mean, she was just couldn't believe that she could get something, else beyond what she had, already done. So it wasn't a lot, it was $5,000, but for her it was everything. So um, sometimes I think we try to, put ourselves in people's shoes as much as we can, but in the same token, sometimes the simplicity is just the best route to start with, and then go from there. And that was a big change in some of my concepts. Keith was mentioning how, I'm trying to adapt and change things all the time. I started 17 years ago. I started in the life insurance industry. That was where I got my in. And so I was always, working with people on their full investment financial futures, and looking at, you know, stocks and their markets and everything else that goes along with a normal, investment advisor. And so a lot of times I kind of went too heavy into, you know, every little thing. And, you know, it's sometimes you just gotta simplify it and keep it simple. So, um, and making sure that you're actually, having that conversation with everybody. I know people say it all the time, and you probably heard it to death, and it's ad nauseum at this point, but it really does come down to, simplicity and asking all the time. And looking at some different approaches. I know I've had some success in the past, not necessarily during the blue vase time period, but I've had a lot of success in the past too with some laddering approaches based on the situation for the customer's concepts. So if you come across someone that's like, yeah, I've got all this debt that's coming in, you can certainly ladder off a couple of policies that allow you to structure things based on the amount of time that's left on those debt instead of doing one single plan. But once again, that came about by you know circling back around after the customer had some policies in place. It wasn't the initial conversation, and I can guarantee you, if you ever do like a video, if you ever were to do a video call with one of your clients and start talking about life insurance, and you start droning on for you know 10 minutes, 15 minutes about whatever it is that you want to try to sell them, you're going to see them just start going like this and you know nodding off, and you're overcomplicating it. So um, make the presentation minute to 2 minutes. Okay, minute to 2 minutes, and that's it. Figure the triggers that 1 to 2 minute conversation have, and then you can develop off of that more. But don't kill yourself with trying to sit there for a half hour and try to present this huge situation for every single customer. Is it going to work sometimes? Absolutely. But you know, get something right off the bat, then set up a review and really take time to dig into it. Um, have that approach. So pause for a second, I guess. Any questions on that part of the conversation? Okay. What have you guys tried so far with regards to, and I'm not sure how many life policies you guys have with your Blue Vase and stuff so far, but what have you guys tried so far? What have you found successful and not successful so far?
I have to say that what I have been finding successful is getting the unfiltered. Well, I actually did put one filter, 18 to 40 on some auto leads.
Yeah.
But other than that, unfiltered and doing just slinging the policies. That's how I managed to get 4 applications in the last week. So, well, 3 of the 4. The other happened to be a already pre-existing client that she called, and it was like, hey, State Farm's trying to get me, State Farm's going to be cheaper. We want to cancel. I went from cancel to adding on a life policy, and then her auto policy come November after she's had 6 months of continuous liability insurance. So that was a nice little save there. But yeah.
Yeah, I did that as a play once too for retention, where a customer had I think they had like, I don't know, it was like $150 a month they were paying, and they'd gotten some quote from Geico or something like that online or whatever it was, and it was like $40 a month cheaper, and I ended up you know getting a Bristol West policy sold with a life policy that was ended up being, I think it was like 155, so it was actually a little bit more than what they were paying before, but it had the life insurance built into it, and obviously the Progressive and Geicos of the world aren't going to be selling life insurance to you or even asking the question. So that's been, I really think if you can have at least one profile through some of your internet leads, that just try it for a week and have like 3 a day or something like that come through, that you know and have it as a separate profile so you can kind of track some of the information, but see if you can get some non-standard options to come through, those people that a lot of times you think, oh, we don't want, but really that's kind of what Bristol West is designed for. And it really does give you a nice easy option to sell some life together with it with that 10% discount. So I mean, I could go on and on and on because, like I said, I started with life insurance in the industry. So, I mean, if you guys ever have concepts that you want to go through or strategies with, shifting out, going from 401k to IOL, like we've been doing a lot of concepts lately where, hey, this person is contributing 10% of their check into their 401k, but their company only matches 3%. So I was like, all right, take that 7% overage, put that into the IOL, show the concept. Um, it works out better, I can guarantee you, because the 401k, if you illustrate it out at 8% every year, and then you take the taxes out in 20 years or whatever it is that they retire, the IOL is gonna show better. So plus you got the floor, the protection in there too. So that's a great opportunity for those that ask the question, hey, are you contributing to a 401k right now? Simple question. They're like, oh, why? Well, just we have a great option that allows you to utilize your funds in a more stable environment, and you have more control over it, as well as the fact that it doesn't have the same taxable implications once you pull that money out of retirement. So there's a lot of different concepts you can look at, and just it's a matter of listening to the client and hearing what they're talking about. But you're not going to hear any of that unless you actually ask a few triggering questions. So we'll always ask, you know, what, where do you guys work? How long have you worked there for? What are you contributing right now to your 401k? Those are four questions that get asked to pretty much every one of our clients. Um, it's simple, but it really opens up the door to a lot of other conversations. The other conversation is going to open up is, and this doesn't affect life insurance, but they're like, oh yeah, I just started a new job. Um, great. Do you need a rollover? So we have that option. We can write the fixed annuities and stuff like that. So um, and it gets the conversation going. It may not end up in life insurance. It may end up with you looking at a rollover plus a couple life policies because you started the conversation. So um, start asking those four questions. See what happens. So um, I guess that's pretty much. I mean, I talk fast, so um, I don't know if there's anything else that really from a quick dive into things that you guys want to know or want to hear. But
You guys have
I
any
did.
questions or objections you want him to review with you? Like things that you've heard out there that that like when somebody is like, hey, no thank you, or however they're approaching it, what are you hearing, Josh? You're like the only one now here.
I um I don't know. I just haven't had much luck at all, and I don't know. Maybe it's my approach. I'm not really sure. Um, I've tried doing everything from I'm mailing out quotes to people, 10-year term, 150,000 platinum choice with the hey, this could be this low. When I sell a policy, we quote it every time. So far, everyone's just been a hard no. Depending on what kind of the no it is, I've pushed a little harder as to, so is it that you're not interested in the life insurance or that you're not interested in the amount? What aren't you interested in? But I'm just not getting much feedback, and maybe I'm just not asking the right questions from people. It's
I know
usually a hard no, just don't want it, not interested.
sometimes when we're setting it up as a package, we had way back in the day we had done a lot of like, okay, here's the price for your here's the price for your rec, here's the price for your life, and that was a problem. We changed that fairly quickly, in our email summaries, and when we're talking to people, we're like, all right, after our conversation, we've discussed what the needs are for you guys as family. We talked about some of the highlights that are the value add for the concept. So when we look at protecting your whole household, we're looking at you know every aspect of the package. It ends up being $250 a month or whatever it ends up being, and that includes everything we talked about, including some basic life insurance to protect the loans that are built in for your debts and your mortgages and so forth, to make sure that you guys are in the best shape that you can. Don't break down the prices. Present the package, and or even just present it as like an A and a B. If you're going to do an A and a B, you're still including life insurance in both A and B. It's just maybe a little different, a little different concept for some things. So like I might have, yeah, this package is going to have, the guaranteed replacement cost coverage, the backup sewer drain and sub pump, kind of the best of the best options that we had discussed, right? This is your catalog package. The other package might be, yeah, this is the one that you had mentioned, where maybe we want to, save on some money and pull down some of those extra coverages, but we're still improving on, everything that we had talked about. Both are going to have the life insurance in there, but you're still giving them a choice A and a B. I don't do that a tremendous amount of time. I generally just give them the one package based off of and I'll use the term, this is my professional comparison, right? So I want to do a professional comparison, and anytime I love it when someone says apples to apples to me. It really, it's the best thing I could possibly hear, because right away I'm like, I'm not about apples to apples. I'm about making sure that, we are protecting your family the right way, and making sure that you are in a situation that does not hurt you in the future come claim time. And right now, there are different gaps that are in your policies and your financial situation that are going to potentially hurt in the long run if a claim comes about. You need to make sure that these gaps are plugged. We've talked about that. We're filling that. Here's the price for that package. And of course, that includes the life insurance. So, so that's the approach I guess I would handle with.
I did, the one thing that you mentioned that it kind of hit home with too is when I started, the first, I don't know, 10 weeks, I was quoting the IUL, what would be, I thought would be best for their future, not necessarily just trying to get that 10-year term. I kind of went for, this is what's going to really help you, rather than let's start with this. So I have changed that, but only in the last probably 2.5 weeks, 3 weeks. So those people that I did sign up before, I'm to the point now where I'm going to start reaching back out to them, say, I check in, how's the policy, how's everything going, any issues, questions, what we talked about this in the past. If you thought anything more about it, and I might present it with different options now. Is that how you handle those two? Like if someone says no and you reach back out to him, do you change what you offer them, or you kind of stick with what you offered them the first time?
A lot of times I'll circle back to them and say, we had this discussion before. I understand, sometimes things aren't working in your lives the right. Maybe, the budget isn't there. But, I want to make sure that we are able to approach this concept in the future and make sure that it's something that we can actually still do. And so I have an option that we can do temporarily that gets us to the point where, we lock in everything we can, other than, all the pricing for, future retirement, future whatever. And that's where I go through that, lock in your health concept. So yeah, that is a fairly common approach, where you circle back and say, yeah, if I did have a conversation about someone that maybe I discussed the 401k option, maybe I discussed the option about, their kids, you know, uh, Coverdell type comparisons or whatever you want to say. And I'll circle back and say, well, I'd love to be able to help you out, even if it's not for this. Let's get you started, at least lock in your health and go from there. I also use a lot of times the concept where, hey, let's at least know the answer to a question that we don't know right now, and that is where you are for your health. It doesn't cost anything to go through the application. You get a free health checkup out of it. I mean, heck, a lot of people like to know what their health is, and worst case scenario, you're getting a quick, in-person interview from a nurse and doing the full blood draw and everything like that. And that's going to cost normally $500 if you go to the clinic. So it doesn't cost them to do the application and just say, hey, we're talking on stuff we don't know the answers to right now because we don't know how healthy you are. Let's get an application in. Doesn't cost you anything. And then once the application gets approved and we know how healthy you are, then we can have the discussion and say, what is what you want to do? And if you decide at that point you don't want to do it, great. But tell them that, so that they're not thinking that they're all of a sudden locked into this, and it gives them more comfort. And 9 times out of 10, when it does approve, they're going to buy it in some fashion. I did that with my most recent customer that just got approved. And she originally applied for a $500,000 20-year term, I believe it was. And she came back. There was some complications with some anxiety and depression and so forth. She got table D, And I sent her back an email and say, hey, congratulations, you got approved. And I gave her literally, I just said, here's the cost for the 10-year at 500,000, the 10-year at 400,000, the 10-year at 300,000. And, I gave her the options for the 20-year as well, since she was approved for that. And it's like, which one would you like? She emailed me back and said, I'll do the 10-year, 300,000. So I sent her the change form, got that back, and just processed the change form. And I don't know if it's actually shown issued yet or not, but it's in process for that change form right now. So, I wouldn't have gotten that if I would have started off saying, yeah, it's going to be, because I got approved for $90 a month at, when she originally applied it, it was like 39, right? But Table D brought it up to $89 for the 500,000. But we ended up selling the 10-year 300,000 and ended up being like $32 and change. So it's better than nothing.
Neat, quick question for you. So piggyback off of what Mike was saying, confidence is the key to selling life. How did you develop your confidence? How did that come about? Was it just, heck, I'm Nate from the start, or where did you build from?
I mean, obviously the background gave me some additional confidence with just knowing, concepts and stuff like that. But really, I don't know, I've always been a salesperson at heart, whether either it was with auto and home life insurance or when I was with Best Buy back in the day. So I guess I've always been kind of a confident individual. And honestly, even if you're not, fake it till you make it. I mean, having that, and you'd be surprised how quickly someone picks up on, waverness in your conversation. If you're changing a tune or hesitating on different things, you're just giving them. I tell people this all the time. I'm just here to provide recommendations based on, your situation. It's your decision to make, but I want to make sure you're the best informed. So be that partner, to make that recommendation for them, and don't sit there and try to strong arm them, and don't sit there and waffle back and forth. Sit back, and sometimes you got to wait for the answer to come through. So.
Can I get your recommendation? The one that area that of many that I've struggled in is the absolute surprise of how people just don't consider their kids. So I will provide, talking the conversation, you got kids, yep, how old are they? You know what? Giving them options for, hey, a lot of people don't think about if something were to happen to them. Here's some options to make sure that you have some, either I usually do the 50K IUL because they're so cheap. It's $20 a month, and say, hey, this can be used not only if something happens, but you're saving for the future, you're providing something for later. And it's just, it's nothing that we're interested in. It shocks me, and I don't, it kind of has been blown away by how people are like, nope, it's not. They'll look at their own more than they'll look at their kids.
Yeah, because a lot of times they're
Nate, you can tell
thinking,
me if I'm wrong, but I think that's where the insurability comes in. Is reminding them that, we're not talking that your kid's gonna die in a week. I mean, horrible things happen. This is more to make sure that later on they have insurability.
it's also too, because a lot of times the first thing that I think people will think of is that, oh, well, my kid doesn't have any debt, my kid doesn't have any expenses, my kid, if something happens, I'll take care of it. I have work coverage for 10 grand. Nobody considers the fact that, are you going to want to go back to work? I mean, what are you going to want to do for the 3 months after something like that happens? And sometimes it's having that tough conversation. And I was talking to a buddy of mine at softball last Thursday, and I was like, we've had this conversation for the last couple of years, for life insurance, and with regards to your kids, we haven't done anything. What's going to happen? I was frank with him. I was like, what's going to happen? If something happens to one of your kids and you're not going to want to go back to work for the next 3 months. And he didn't have an answer for me. So the next day I got a text from him saying, hey, send me some quotes again. So
maybe that's what I got to do. I stayed away from that, and I presented more of a, not only as a way of saving for college, but you can save, help them for once they get to retirement. And there's all these things that you can do to provide for their future. That's as little as you can do. And then so many kids are finding out that they have something that would reduce their insurability. So this locks them in so that they can
Yeah.
continue.
And it's, you're not trying to like strong arm them with like sadness and depression and so forth. That's not the concept. It's like,
No,
our job is
Fact.
to get people, insurance is all about getting them from point where the event that's happened back to, back to whole life, back to something that they can, repair. So if the storm hits their house, the house gets repaired, they're back to what it was before. Obviously, if something happens to their family, you're not going to be able to get that kid back. And you're not going to say stuff like that to them. But you're also saying you're going to want to put time with your family. You're going to want to be able to not have to say, oh, yeah, honey, I got to go back to work next week because, I have to, right? You don't want to have those types of conversations, when something like that happens. So this, I mean, if they say they can't afford it, there's nobody out there, I don't care how tight your budget is, that can't afford $15 a month for each of your kids. It's the God honest truth. I mean, how many people are spending, $5 a day on coffee, on donuts, on, Keith's probably paying $15 a day.
Him in the story.
But I mean, really, it's, you can find a way to do it. And honestly, I've done that before where I've said, we're looking at this as an overall package. We're trying to make sure that things are fitting. What, open up your budget a little bit to me. What talk to me about what you guys, spend your money on. And I'm not going to tell you what you have to do, what you can't do, but I can certainly give you recommendations on stuff that I've gone through. Because I've been through it. There was, when I first started, I was broker than shit. I mean, I didn't have any money in my name, right? And I know what it means to, to budget for $60 a month on groceries, for a family. I mean, I've been in that situation. So, I mean, I've actually taught Dave Ramsey classes before, even though Dave Ramsey is against, a lot of the permanent policies. But I understand the conception that he looks at, and I understand how sometimes people will look at it. But I look at it sometimes, open up that budget, talk to me about it. What's got you concerned? Where are you at? Be that person that they can rely on. So, can you do that to everybody? If it's like an internet lead calling off the bat, no. But have it for your, for your first client review. Just talk to them. Have that conversation.
how long do you wait? So you get that first no, right? They buy everything else. They buy the home out of whatever it is. I've been giving it about a month before I follow back up for that second conversation about life insurance. Is that too soon? Do you think, would you wait longer, quicker?
No, I have automation that automatically is going out in that time frame,
Okay.
after the sale goes out. So right now, I think my automation for life insurance after a sale is 30 days, 3 months, 6 months, and then the year, like the renewal type concept. That's what's in play right now.
Okay. Okay.
So Nate, quick question to help these guys a little bit. So if you had to start all over again and sell 10 policies within 6 months, where would be the first place you would go?
Like product wise, or are you talking about just concept wise?
Concept wise, marketing. So
I would look at, making sure that you're doing the package concept, and approaching, making sure that you're approaching it from a, hey, this is the price for all the stuff we talked about, including the protection for, for your, mortgage protection, however you want to phrase it. You know, if you're going to do the internet leads, focusing on some of those not necessarily standard options. There's going to be some quick options, because if you can do a couple of simple, um, simple terms or whatever, and get those to approve within 2-3 days. I mean, it's pretty quick. Obviously, kids policies are nice, but not every client has a kid. Not every situation, has a kid. If you need ones in a pinch, I mean, honestly, look for the family members that do count as non-controllable business. I mean, there are family members that don't get excluded. You know, nephews and nieces are options. So I don't know what your family is like, but obviously you don't want to rely on that, you know, because that tree is going to dry up, you know, pretty quickly. But you know, but certainly you can still, look at some of the family tree, friends tree that don't get considered as controlled business. So
I was just gonna go park my business over by the local daycare center and just see if I can hand out pamphlets for all the parents. Whatever I can do, I mean.
Creepy.
yeah, have some candy in the truck. No.
Yeah, van, no windows. I got insurance with some
Oh my
candy.
gosh. Yeah, let's not do that.
No, no.
We're gonna have to edit
I was
this
told by
part
Nate it
out.
was a good idea. Come here.
Yeah.
I appreciate you doing this,
I
Nate. It's anything
yeah,
to try to make it better. So
I'll be honest, I procrastinated some when, partly because I had a lot going on when we first started with farmers, and that's an excuse, but maybe that was I see Jess and Keith kind of shaking their head. Because yeah, I mean, I sold most of my stuff. I think I sold most of my policies in the last, like, what was it, 2.5 months of
Months. It was scary because we were like, Nate, hey Nate, Nate, hey Nate. All of a sudden 2 months left and he's like, bam, 10 policies done. We're like, where'd that come from? Like,
yeah. For me, it, obviously, like I said, busyness is an excuse, but that's,
you were busy though.
we did have a lot of stuff going on, and it came down to just buckling down and just refocusing on it, and making sure that it was part of every conversation and every aspect, and actually taking. I think I actually set aside during that time. I set aside a full day every week for that last um, real well, it wasn't the full 60 days, but probably at least 30 days where I did like 4 or 5 weeks in a row where every Friday was basically life insurance day in my office, where I didn't do anything but try to drum up life insurance business, and I ignored everything else. So and that's something that we're actually kind of getting back into for, now that we have a lot of our systems in place now too, is having trying to departmentalize a little bit and say, okay, this part of my week is to network. This part of my week is to focus on drumming up some business for commercial. This is part of my week to focus on life insurance. And that's, now that we have a lot of our stuff in place and our systems in place and Zoom and everything else, we're starting to actually have the time to be able to do that and really, get into that proper focus. So, but yeah, I mean, if you don't put any focus on it, it's not going to happen. So, Mike, was yours pretty much spread out, or did you have it in kind of a big bulk too? I don't remember what yours did.
I think the more I focused on it, the more I was able to sell. And I think the one thing that working friends and family, right? And that's kind of where I said the confidence is key. And I think the more you can sit down with the computer, turn the screen, run through the conversation, run through the application with people, the more confident you're going to get kind of going through it, reading the questions, understanding that, some of the conversations that's going to go back and forth. I think that kind of helps instigate, like, oh, okay, no, I got this. We had three of mine came from a family that has 3 kids, right? So the whole conversation came down to, it wasn't $50 a month per kid. It wasn't that. It was like, okay, if we got a budget of $100 a month, how can we fit all 3 kids within that budget, right? So $50 a month on an IUL, yeah, it's good. It's not going to perform great. We did $30. Just illustrate out $30. We could get all 3 of them in for less than $100. And as the kids turn 18, and as the kids get older, the ownership can change. You can start funneling, they get a job. You can start funneling that a little bit more. So it's more of a, you got the door open, we're going to increase this over time, right?
Yeah, we did a few that were in the $15 to $20 range, and did it as made sure to do it as not the level benefit, but the actual increasing benefit, and saying, okay, 3, 4, or 5 years down the road, you can push more money into it, and see what that does. I had a nephew that that I had during my blue vase, I sold one to him that counted during that time. And since then we converted his policy into an IUL. And now like a bunch of his other, my other family members my other nephews and nieces, I've had two other family members, one nephew, one niece, that reached out like, well, how come we don't have that for us? I mean, it was like, we saw that our for one, it was, the brother, and the other one was a cousin. And he's putting $100 a month now into this IUL, and understands the concept and knows how important it is to put money away, right off the bat. And they all have jobs. One's 20, one's 18, one's 22, but they're all making money. They're all putting money aside. So I mean, I now have, from that initial nephew that did it, I've since sold 3 other policies, just because the nephew was talking to his other family members that it's like, hey, I just did this with Uncle Nate, you should do it too. So it worked out well.
So the one last thing that I was thinking about on this one, this goes back to a question that you asked Josh. How long do you wait till you kind of hit back at them? I've done 2 of them now where we close the home and auto, and you can go back in, all the billing set, the home's done, dust has settled a little bit. Then you look at how much they can save. So what would be the discount total off the other 2 policies? And then you find a life policy and you kind of cater that life policy and you kind of max it out. Like, let's say in a 10-year term, let's say they save $200. Okay, where does that fit into 10-year term? You approach it on that and say, hey, tell you what, here's what we're able to do. I kind of played around with this life policy. This is the discounts that you would be qualified for, and this is what the policy is. Now they're making the association of like, it is really I don't want to say free, but a free policy at that point, right?
Yeah.
Versus trying to hit it at the front end where you already have a lot of documents. You're already trying to get into that relationship building with them. You've already built that. You've already closed the policies. Now you're looking at it. Hey, just looking at where can we maximize our opportunity here? Here's a spot where I could maximize an opportunity.
Yeah, it's like a welcome to our agency. Thanks for coming on board. We're just double checking all your discounts. Here's an option that that you can still take advantage of. Absolutely.
Right.
Yep.
And then you're taking it, instead of having to worry about auto, worry about home, worry about everything else, that's already done. Now we can just look, okay, what's next?
Okay, so good question, because I'm just popped in my head. I was under the understanding that you couldn't add a discount mid policy. So if they signed up for life, they wouldn't qualify for that discount till it renewed in 6 months. Can you actually add a discount on a month later?
Mm-hmm. Absolutely.
Okay, because I swear I reached out to the help thing about how to add a policy, and they're like, you can't till it renews.
That's a business. That issue comes up sometimes on commercial, but I have not seen it for personal lines.
Okay. That's good to know, because I had someone that wanted to add something if they could get the discount. And when I reached out to the help thing, they said that couldn't be done until the renewal. So I was like, oh, okay, that's fine. Like, they ended up doing it still, and I said, well, when we renew, it'll be. But now I'm gonna have to go back in and see if I can change the policy. Is it just simple? It's not like a rewrite, is it?
No.
Okay.
Nope, you're just going in and adding the discount.
Okay. Maybe I
Our help
didn't
thing strikes again.
question it right. I don't know, because I mean, that would make it a lot easier to sell. You're already paying this a month.
That's
If you ever get a weird response from us, from the chat or whatever, that doesn't necessarily make sense, run it past the group, because 9 times out of 10, I think we had one that Alice and I were talking about too, where it's just like, no, you just gotta chat back in to talk to someone else, because they don't know what they're talking about. So
Well, and I'm being so new, I
unfortunately,
don't always know that they don't know what they're talking about.
right,
So
yeah,
I trust it. That's
yeah.
not good.
Yeah, and obviously it sucks to have to question that sometimes, but if you come across something like that, maybe just run it past the group and just double check to see if anybody has any feedback for you, because we'll always give you an answer. So
They'll tell you if it's worth fighting for, or if it's like, yeah,
Yeah.
that's kind of how it is.
Okay. I thank you
But
for
again,
that
that's
answer.
a great way to do it. It's a great way because then you already kind of know fixed cost on what the policies are already running, right?
No, that's good to know, because that gives me something for the next couple days, try to run through all those and see if I can get some of those policies I didn't capitalize on the first time.
And you can reach out to any of us here if you want to run through the policy and make sure it makes sense. But always ask them, when my experience was, always ask them for their numbers. Make sure it's personalized to them. Make sure if they tell you, make sure they tell you what the debt is. If you're having that belly to belly conversation, make sure the numbers are there so that when they come up with, oh, I need $500,000 worth of coverage, they know you're not blowing smoke. They
Yep.
actually need it, right? But in these cases, that's where I always said, like, how much do you need? And then how much can you afford? And those things always like, all right, now how we ought to find the balance, right? Because usually they can't afford how much they need. But getting them into anything is extremely important, especially for insurability, especially right now.
Yeah.
I'll never forget my first death claim that came through from it was a term policy. The client's daughter came home from school, found the mother, dead on the kitchen floor, and they had done a term policy with us back, gosh, it was probably 10 years before that, and we were able to give them a check for $500,000, and obviously it's hard to look at those situations, but the tears that the husband had, and remembering that the policy was there, and remembering that money was coming through, I'll never forget it, because it created such peace for him, knowing that was there to help out. And he pulled back from his job for a while, and he was an executive at his business, and he pulled back for about 3-4 months and really did not much of anything. And I talk to him still to this day many times. We run into each other all the time. Our kids are around the same age, and so we see each other at sports, different schools, but the family is thriving, and they're still in a good spot now. And I can only imagine what wouldn't have happened if they didn't have that. So it's tough. It's tough to have the conversations, but when you see stuff like that, and it really gives you that confidence yourself that says, I am doing the right thing. Doesn't matter what they're getting, as long as you're getting something. So that's how I'll end it. So I don't really have anything else, I guess, to add, at this point, but I got to get going to another meeting here too. So
Thank you
All
for your
right,
time.
thank you so
Nate.
much.
Thank you, Nate.
Thanks, Nate.
all right.
All
Yep.
right.
Bye.
Everyone have a good day.
Thank you.